Welcome to Java. Thank you kindly for joining me. It's February 24th, 2025. It is also Monday, so hopefully everybody had a wonderful weekend. We've got a tremendous amount to cover this morning. I'm hoping I can at least scratch the surface. It's amazing how much has happened now. I stopped doing the Sunday prior to the markets. I may have to begin again if it continues in this clip. We've got so much going on. So we're going to be speaking about global things as well as the markets, couple of individual movers. We've got Nvidia coming out with their earnings later this week. So let's get started, as always, with our favorite risk indicator is the MMRI. Now, the Manorino risk indicator is below 300 at the moment. So this is still high territory risk. We've got a lot of factors coming in here. We've got the fear greed meter is dropped solidly into the fear shift. Now, Friday was major options expiry, and this put a heavy weather dosing on the stocks Friday, dragged them down quite a bit. We need some recovery today. It looks as if the likelihood probability favors that it will at least head in that direction of positivity if we are looking to the futures over here. Now we've got gold and silver are hitting resistance, pulling back a bit. We've got crude oil is, kind of holding level really is what's going on with energy. I'll talk about that, of course, in a bit. Now, as I said, Friday really kind of tanked stocks quite a bit as that closed. Now we've got things going on globally. The first of which I would like to speak about Asian markets. Now, they're strong on what equates to quantitative easing. Now, their public sector, they're printing. They've got a lot of things they're doing with the yuan in the background. They've also got some trade going on directly with, of all countries, Japan. Now, with this, they're also pulling back with some of their currency, strengthening the yen. And along with this is coming some strength back into the Asian market. So Chinese stocks are bumping up on a few reasons, the first of which is that they are doing this to strengthen their yen, kind of countering with the United States dollar. Now, with all of this, taking a look at the United States 10-year yield, we've got a bit of a war of bonds going on now. So 10-year yield pulled back slightly below 4.5. And what this means is that more money is pouring into the bonds, into the debt. So it's bringing that yield down as the price goes up and demand for it is actually going up. So this is a shift in your currencies that you're seeing again. Now, there is also an additional shift in markets this morning. A lot of this due to Europe, and this is because of the German elections. So we'll speak about that in a minute as well, but it looks like Scholz is out. Now, the Dixie relative strength of the dollar below 107. So as this is losing strength, this makes the United States stock market grow a little bit stronger. So I think we'll head a little bit stronger in general this Monday morning. We'll see when it opens. We've got cryptocurrencies are generally facing headwinds. They took a bit of a hit over the weekend as well. We'll see where they head. Strong support still for Bitcoin at about 92,000. It jumped back above 95,000 this morning, so already looking at a bit of recovery from this. Now, I want to speak a little bit about sentiment this morning because it is in the calendar in a little bit. But I always talk about the numbers that are coming out in reports and what they're saying the economy is doing and the real economy that we're seeing with our eyes. Now, this is a classic case. We've got stories like this coming out. The pickup truck sales losing steam, which is true. Now it's saying America may have reached what they're calling peak truck thanks to high prices. Now, that's not exactly correct. It's not the high prices that's doing it because prices have been high for some time. That is measure of the inflation. What's going on is there's lack of affordability, but it's from the other side. It's not the price of the truck, but rather that consumers and people have less to spend. And that in turn is going to drop the price of the truck. So they're not purchasing. So still same end result. Why is this important? Because this is an underlying indicator of what is actually going on in the economy. The consumer is getting weaker, less spending, and this spells trouble across the broad market, not just in the sector of trucks. So this ties into the next one is the mass firing of federal workers by the White House not showing up in jobless claims yet. Now, I spoke about this before, that they're giving them severance. So this is not going to show up until that is up sometime around August or September, because they are going to be paid for some time. So the smart ones will be getting jobs now if they can, double dipping and kind of building for that forward. So we'll see how that works out. Now, I want to dive a little bit more, starting with the calendar. We're not expecting a lot this Monday, it's mostly looking at recovery and headline-driven news. Now, tomorrow we're getting Fed presidents again and this consumer confidence. So that'll be interesting to see what they come out with on that one. Now, in the underlying, we've got stock investors stopped freaking out over interest rates. Now this threat is re-emerging about interest rates. Now, I don't know about this. We've got some interesting moves in the bond market, as I said. A lot of manipulation going on back here. And the bond market, debt market, same thing, much larger than the stock market. I've said this before, but in case you're new here, the debt market, bond market will move the rest of the markets. That's where we want to look. That 10-year yield is the general benchmark that most look at for that indicator. Now, we've got consumers worried about the economy, and what is behind the consumer sentiment drop is things like eggs, because they cannot afford them anymore. The jump in prices, well, they're saying that inflation is remaining between 2 and 3%, which is not correct. It's much higher than even 3%. So we'll take a depth look at this as well. As we're seeing deficits, inflation, and volatility lurking, don't be fooled by the quiet. I agree with this. I think this is a bit of an eye in the storm, if you will. A lot of things going on, many pieces moving in this puzzle. So right here, the case for buying high yield bonds now. That is debatable. Now, the case for buying high yield bonds is that they're expecting the yields to go down as people buy into the debt or as the Federal Reserve purchases the debt. Now, Federal Reserve owns roughly a third of their own debt, or at least has printed to purchase it. I should put it that way. It's a little more accurate. So we've got banks facing promise and peril with weakened bank regulators. This is all tied in with them being forced to hold a lot of this longer term debt and loan out at higher rates on shorter terms. So banks have had deficits on their balance sheets. They're incredibly weak. At the moment, I've been saying this, there's a lot more that need to merge or just go out of business. Banks are going the way of the dodo bird, so to speak, in the way that we know them in the classic sense. They're going to be moving to cryptocurrency and exchanges as they usher in the CBDC, which is what they're all headed towards. Now, one other critical hit that they're taking, for instance, the wildfires, but it's not just these, it's all of the disasters that have been hitting insurance companies at the very base of them. So this is saying they were struggling prior to this, but why is this important? Is because this is major holding on the balance sheets of all of these larger banks. Now, a lot of bond holding is required, a lot of portfolios required for that 60-40 split. If they are directed with that, they have to hold whether it is the 60-40 or 70-30 split between stocks and bonds. So if they have to rebalance with these, that means they have to purchase whether these are underwater or not. They have to rebalance in those sectors. So I think right now that is one of the only things keeping them afloat. So the other factor to keep in mind is that they could get government subsidies to keep them if they are too big to fail, so to speak. We'll go back to that. We had Warren Buffett came out with his annual letter. He always comes out with good points of knowledge, saying again that he prefers stocks over cash. Well, obviously, anyone with a bit of thought would do that because stocks are performing assets. They return to you. If you sit on cash, you're having it stolen from you at the rate of inflation, guaranteed, if not more. So, that being said, he's gone to a larger cash position. The reason somebody would go to a large cash position is only if they believe that the assets that they are holding will drop in value, at least in the short term period. So, watching Berkshire Hathaway also for signals. As far as the stock market, they're a large indicator with that. This is earnings this week forward. Got a few interesting ones on here. I'm going to leave this for a moment because it is for the week, as I said, NVIDIA. Also, a few other large ones, but I don't have time to go through all of these. So we'll move on. There's a lot to cover this morning. Okay, what is moving the Asian markets this morning? So, as I was talking about Chinese shares lifting the Asian markets, this is because of getting QE. Same reason we watched the United States markets move up as soon as they were announcing that they were buying. All of the money is going to flow where they're going to get return, which is the stock market. So as the dollar weakens, strengthening the yen, and they're also providing money to flow into the markets, going into the stock market now in China. Better bet, money's moving. They've got the 10-year yield also. We're watching them, of course. It's not as large of a market, but still worth watching. Now, their yield rallied, meaning that they need more into their debts. Their 10-year government bond climbing on a 2-month high. Now, Alibaba is one of their larger stocks that we watch, like our Tech 7, Mag 7. They are the equivalent of Amazon. So they're investing a massive $53 billion in artificial intelligence infrastructure. Again, this is global war. They're taking on the Stargate artificial intelligence plan. So we had something else interesting come out from Apple saying that they're planning $500 billion investment in the United States. Now, is that part of the Stargate plan? Got to wonder. Where that money is flowing back and forth between tech and the government is very interesting to watch. Now, with this, we've also got, aside from Apple, Microsoft, saying that they're reportedly canceling data center leases. Now, this is a little misleading because they're canceling data center leases in the United States. And what they're doing is they're building out very quietly different areas near energy sectors, and they want to own their own. So a lot of that going on in the background. So don't be fooled by the headlines. Okay. The other thing I wanted to talk about a little bit more, Germany's election now, a little bit more conservative leaning. So it looks like Merz now will be leading there. The next chancellor, Scholz, is out, as I said. And as this happened, this boosted the euro stock market because of this. So they're saying that this is good for the economy. Also, perceived wealth. Again, it's not directly related to their economy, is still very sick. However, if their stocks go up, that's what they're going to tell the public. Now, we've got the European Union considering investing in foreign fossil fuel. Now, this dirty fuel, so they are turning their backs on this Green Party that got them in trouble in the first place. But I said this would happen. We were talking about this. They need energy. That's what sank them in the first place, raised their prices in the manufacturing, and put them out of competition. Now, if they actually do this, this could shift their position again to where they become profitable once more, if it's not too late. A couple of other things I just want to leave in here. Zelensky is offering to step down in exchange for peace and NATO membership. Now, I've got a couple of pieces of news for this gentleman here. The first is that elections are passed, you're overholding your term. And second, NATO membership for you is not going to happen. So good luck with that, but notwithstanding. So I also want to put this in here that Irish citizenship applications from Britain, they're saying, hitting post-Brexit peak. And no more comment on that. I'll just leave that as it is. So I'd like to cover something else. I think this is very important. It is larger than the markets in my mind, has a lot more. I spoke about this several months ago with the undersea cables. I hear a little bit about it with the sabotage that's been going on. Now we've got an undersea cable break has occurred in the Baltic off the coast of Gotland, according to Swedish media. Now, they've seized a ship suspected of having done this. These are the fiber optic cables. It's their main transit for all of the communications. Now, there have been several of these cut, and it's going kind of quietly in the media, but not. And at the same time now, we've got Meta spending billions. They've got a plan for the world's longest subsea internet cable. They'll be linking United States, Brazil, South Africa. I don't think they meant to have that comma there. India and other regions. Now, do you think this is coincidence? I happen not to. But if you look at the pattern that they're doing, they're actually planning on several, probably within the next 5 years, 5 to 10 years, having full build out. So I'll just leave this here as well. But I think this takes a little bit of thought and consideration in some of these things that most people pass off. One other thing I do want to put in here, and interesting news that could shake markets because it has far-reaching ripples, and this is regarding Pope Francis. Now, he is hospitalized, and they're saying that they're providing bleak updates on his health. He's critically ill with pneumonia, is the last that they had heard. So we'll see what that does. So with this, I'm going to let you go. It's been a very long episode. I appreciate you all staying with me, particularly if you're new here. And if you would hit the like button, if you did indeed like this. Until I see you again, my friends, stay free.